Hey, it's Chris Miles here, your anti-financial advisor. Hey, I want to share with you something that I saw from a guy that came to me asking about different insurance plans because, here's the thing. You hear people like Dave Ramsey and Suze Orman and most of the media out there, most of the financial experts will say whole life is a ripoff, right? And you know what? I actually, to some level, agree with them. Here's why: is that the way it's been done traditionally stinks, and even some of the non-traditional ways aren't that great either. And so you can do it so much better. So when Dave Ramsey and Susie Orman say it's a waste of money, they're not lying. And let me give you an example. So when I was first a financial advisor, I was poo-pooing all over whole life, right? Like I hated it. I was selling more like mutual funds and more like UL type stuff, things that are tied to the stock market. But as time went on, I started to realize there was holes there. Now, I had heard from real estate investors that they loved whole life, and big time business owners, people that were millionaires, loved it. And I thought they were crazy. And I thought, well, wait, okay, let's think of this. I'm a broke financial advisor, like most financial advisors out there, listening to other financial advisors that aren't financially free. But these financially free people are telling me this is the best thing since sliced bread. So, anyways, long story short, I started to learn how they were using it a little bit differently. I went to them and got my own policy. Now, 2 years later, the recession hit. I couldn't afford to pay the premiums, and I lost it. I put in about $25,000 into that plan and lost it. This is where Dave Ramsey and Susie Orman are correct, because for me, that was like expensive term insurance that was wasted. But there is a better way to do it. So I'm going to show you three examples here. Three examples I'll share with my screen just so you can see exactly what I'm talking about. Because this first plan here, this is more like the traditional type of plan that I was sold that I lost. And I realized that the agent, the only reason he sold it to me this way is because he wanted more commissions. And that's just not cool, right? That's why they tell you, yeah, it's big commission and everything. There is no doubt I would make a ton more money if I sold a plan like this one. So you can see here, this is an example of one of my clients when he came to me with a proposal. The premium, if he wanted $1.9 million in death benefit, he's only 33 years old, that premium would be about $19,400 a year. Now notice where it says total cash value. This is the cash that's actually in there growing. Now notice the first 2 years, it's zero, like nada, zero, whichever, or whatever you want to say, right? It's bad. It's gone. Everything's going to fees, the insurance cost, which is where the insurance agents make their money. They make a percentage of those insurance costs, right? Now, finally, by year 3, it starts to grow. But notice, maybe you're putting in 19,400. I mean, that means in 10 years, you put 194,000. Still, you're only at 180,000 bucks, right? Finally, by the time you hit about year 12, and this is actually pretty good, by the way, most plans take longer. Year 12, you finally have more in cash than what you put in. So it takes forever to get there. Now, let me give you an apples to apples, a little bit different scenario. Now, I remember the insurance agent argued with me saying, well, you should have a big death benefit. You should have as much as you can get. Okay, great. Well, I showed him this. So I went to this agent. I said, hey, listen, the plan you sold me, like it can be done better. Like you can actually overfund this. You can actually have more money going in cash from day one. And I said, had I had this, I wouldn't have lost my plan. Now he went back and forth. One of the big things is he said, well, it has to have the same death benefit. So I said, great. Let's show the same death benefit. I did a plan very similar to this and watch what happens. Now notice it took you year 12 to have 242,000. Even by year 5, you only had 52,000 after putting in almost 100 grand. You only had half the money in there. Watch this. Doing the same kind of plan, no different, same death benefit. Actually, you get a bigger death benefit. Look what happens. Instead of 52,000, you've got 82,000. By the way, look at year 1. You got 11,500. You got cash from day 1. Even by year 2, when you were supposed to have 0, you got 24,000 bucks in there. And then of course it starts to keep growing from there. By year, really in this case, by about year 8, pretty close to year 8, then you're finally breaking even, right? Now you're about to break even on this. This is what's traditionally called the traditional infinite banking plan, right? Or IBC. It's usually about year 7 or 8, you kind of break even on this, and that's fine and all. Now, a lot of them don't go for this max death benefit like I'm showing you here, but still you could end up doing it. Now, watch this. This is more of the plan that I share. This is what I could refer to as a max ROI infinite banking. So it's not just infinite banking. It's actually how do we get the biggest bang for a buck? How do we lower costs as much as we can while allowing the premium to go in there? So again, same exact premium, but look at this. Day 1 or year 1 even, and day 1, you got 15,600. Now remember the other infinite banking plan, there's 11,500. And they would tell you, hey, look, that's awesome. You've got like 2/3 of your money in there. Congratulations. And I'm saying, no, I want like more. I want about 80% of my money in there, from day one, right? But look at this. By about year 5, you put in 97,000, you've got almost 97,000 there in year 5. And then by year 6, you're blowing out of the water. Remember, it took 12 years in that original plan to hit it. We're already at 295,000. The other one at year 12 was at 269,000. So already you're like 30,000 bucks better just by doing this more max ROI. Now, granted, the death benefit's smaller, right? It's not 1.9 million. It's about $1 million less. But I'll tell you, most of the people are coming to me say, you know what? I don't care about having this huge death benefit. I want a death benefit. I think it's going to protect my family, but I want this to pay me good tax-free income. I want some money I can access now that I can turn around and invest in real estate, or I can use it in my business and create a better ROI there versus put all my money in these plans where, as you saw here, first 2 years, you have no cash. You're just sending all this money there to just go to nothing, right? Just to go into your insurance costs. And granted, it's not the worst thing in the world, but I'll tell you, if I had a plan more like this third one, this max ROI infinite banking, if I had funded that for 2 years doing that same thing, I'd have 32,000 bucks. Or to put it, when I was doing it, what I was doing before, I'd have probably about $20,000 in there. If I couldn't pay the premium, not a problem. By the way, the minimum premium on this thing is just under $4,000 a year, right? So even if I couldn't pay the premium, I have enough cash in here. I can keep paying my premiums forever. It would never run out on me. Unlike that plan I got, where because I only had a couple $100 in the third year, it ran out of money. It ate it all up because of all those high costs. Guys, this is what's so critical. And this is what's driving me right now, because you shouldn't be paying all of your money to insurance costs. You should be able to get something that's effective and works from day one. And there's ways to do this that, man, like make this a no-brainer, because the way I use this is I'm using this money not to just sit there, which is great as an emergency reserve to make more than 0.0% in my savings account, but I'm using this money to invest, whether it be in business or in like my investments like real estate, that then I can turn that money through and I get to double dip on my investment returns. I get to make money in 2 places at the same time, because I still make money on my investments because it's not taking money out of my pocket. And 2, guess what? I also get to make money in here tax-free as well at the same exact time, because I can leverage and borrow money from the insurance company to be able to make more money. That is the key to freedom right there, guys. Not pay it at all to stupid insurance costs that just go to agent commissions and make them a ton load of money. That's not the way it should be. By the way, in this plan, I make about 15% of what I would make on that plan that gives you 0 income. So I cut back my cost 85%. But the difference is you have more money. And I know that as a result, you guys want to get more in here because you can get more back out. So anyways, guys, I wanted you to see that. I wanted you to see the difference between traditional whole life that Dave Ramsey and Suze Orman hate, and they should. Infinite banking, which is okay. It's good. It's good, but it's not the best, which is this max ROI infinite banking. So guys, if you have any questions, you can always shoot me an email, chris@moneyripples.com, to see how this will apply in your life. Guys, I hope you make it a great day. We'll see you later.